Good morning, everyone. Good to see you guys once again. Our last trading day of the week. Good to see you all. Good to see you all. Let me do a quick little post here. All right, guys. Brian, good morning. See you were consistent this week. Paul, good morning to you as well. Good to see you guys. All right, I was just doing a little post there. We're gonna go ahead and get started with gold as always. As you guys can see from the looks of price action from yesterday, the zone that we were trading at, we did not get any sort of selling pressure come in below those 44.25s, but we understood the market structure, we understood the momentum. We'll do a review of this movement because interesting enough, as I always tell you guys, a lot of times when you see these large shifts in market structure, the change in that sentiment, for the most part, they're going to be fundamentally driven. So believe it or not, I'm gonna pull up an article, which I'm sure I'll find one, and because I had seen one earlier, an article from Market Buzz. We'll pull up an article and we'll go over really what ended up happening as to why gold pushed so hard. Honestly, mostly speculation, but again, we'll do that in just a second. Let's go ahead and do our top-down analysis first. Make sure we have good zones listed, understand the market structure from the higher time frames, and then as we dive into those intraday time frames and lower time frames, we'll talk about some ideas that we can be on the lookout for today. But let's be cautious, guys, because we are nearing, today is the last day of the week, trading week, of course, and we have also the end of the month, right? So a lot of times as the month ends, you have a rebalance of moves, right? And you're going to see, for sometimes, right, a lot of liquidity grabs. You can see large movements, like honestly, like what we saw yesterday. Like that's what a lot of investors will call like rebalancing portfolios, right? So it happens a lot towards the end of the month, the end of quarters and things like that. And so let's just be cautious of any sort of sporadic movement. If the conditions are not in our favor, guys, let's just move on, be patient for next month's better trading conditions. If conditions don't align with us today. But so far so good, everything looks solid. So let's go ahead and get started with gold here. On this, Kim, good morning. So on this daily time frame, we're still bearish because all we're doing right now, it looks like, is price creating a lower high point, because we have this low point right here, and where this came from is this high point at the 45.75. So at the 45.75s on the daily time frame, unless we're trading above that, that's where that daily time frame shifts to a more bullish market structure. Right now, price is just recovering from these lows and doing a pullback against this overall bearish structure right here. On the 4 hour, this is where it gets a little bit more tricky, because now when we look at where this last low was created and we see that it came from this high, we broke above that high yesterday. So on the 4 hour, we've shifted out of that bearish structure that we were on, just because of the fact that, again, we have let's follow it from these highs. And let's say this is our first lower low here. Then we have a lower high, another lower low, lower high, lower low, and then we have a break of this lower high. So again, that shifted that market structure. This is also that area that I was talking to you guys about, where we can potentially pull back into, and if we can get more rejections and buyers exhausting at those 44.60s, which was this area of interest, that's where that 4 hour was going to continue being more bearish. So if you can get rejections and exhaustion on the buyer side, then the sells made sense. But again, we did not get that. We just got a clean, straight push above all our areas of interest. Absolutely nothing to stop those buyers yesterday. And now on the 1 hour, you can also see how that market structure shifted really as we got above those 4460s. Because again, the 4460s is where this last low got created and where it came from. So that was that main area that we needed to pay attention to, that we needed to stay below to really continue on those intraday timeframes on the more bearish sides, right? So now we're looking at gold. Let's just adjust a few of the zones, because again, looking at just the zones that we have marked off, they look pretty good. We have on the 1 hour, even this zone, this 40, back to those 4500s right here at this area of interest. You can see, let me just delete this and remake it. I'm gonna mark off those 4500s and just around like the 4495s, kind of just like something like this. This is where you get like your overall market reactions, where you have, this was that last low that got created before pushing towards the upside, lining up with that 4500 psychological level there. It's like a psychological price point, 4500s. We have the clear reactions at the 4500s towards the left as well. So we know that that's a very clear area of interest, okay? If we near the 4500s once again, then we'll obviously be on the lookout for price to maybe do, it can do a little bit of deeper pullbacks into like the 4490s, and still this 1 hour would be bullish, right? Because we're marking off the 4500s as our main like area of interest, because we know that that's like that price range where price has continued to trade by. But based off market structure and this current price action, we know that price can go into the 4490s, still respect these lows, and then overall continue bullish above those areas of interest there. All right. So we have the daily bearish, but the 4 hour and the 1 hour is more bullish, right? Now, because that daily is still bearish, and because in my opinion, fundamentals overall, to be honest, really have not shifted much, because this right here, now that we can get into the review, all right, actually before we get into the review, let's mark off this one more low. We have a low, which was a previous high, which is where price is approaching, where if we cannot break below this area, then at this point, just continue to adapt to that bullish market structure. You have higher highs, higher lows, higher highs, higher lows, higher highs. If you create a higher low here and fail to break below this 4512s area, I wouldn't even be on the lookout for any sort of deeper pullbacks. I would just look for rejection plays and continue to ride that bullish momentum here on gold. Once we start to get candle closures below this area, that's where you can be on the lookout for deeper pullbacks into the 4500s. But again, right now with the current momentum, if price is to stop at this zone and fail to really break below, that would be our buy zone. Although I would say 4500 is a much better buy zone, but just by following price action, let's just follow it through here. Like the highs, we have lows, higher highs, higher low. Momentum wise, ideally we don't get below this area, because then you would be starting to kill that momentum that the buyers have. And so you would want to just continue on this path to go and retest those highs and then possibly go even higher into these previous highs over here. That's if the bullish market structure is going to hold, and if the market continues to go more bullish. Juan, good morning, my friend. Good to see you once again. I saw you killed it on US 30 once more. Got ourselves a US 30 assassin over here, man, taking US 30's money. But all right, so those would be like the main buy zones that we have for gold. The 4512s, if we can exhaust and reject, let's see what that looks like on the lower time frames. Yeah, ideally, look at how, for example, price action here in the past, we dug a little bit below the 4512s, actually just around the 4512s, but you can see how buyers stepped in each time. Like this was like price getting here, like there's a quadruple bottom right here. So again, showing you that buyers are still very much present at this area of interest. So we could expect the same thing as long as we're not really trading below or closing below, like no 15-minute candle closing below, no 1 hour candles, 30-minute candles closing below, and continuing to reject this area. So we could expect another push back towards the upside, right? That's why I say, like, momentum wise, we wouldn't look out for a pullback unless you're really trading and closing below the 45.12s. Like you really have to be breaking those lows. At that point, it would be better to just wait for a deeper pullback to then look out for buys at the 4500s following the overall structure, right? So those would be our ideas for gold. But let's quickly go over why gold just completely broke out of this bearish structure here. And honestly, this just goes to show just how markets react based off of speculation. You don't always have to be, or excuse me, you don't always have to base all the information that you see on reality and thinking that unless it's real, the market is not going to pay attention to that. And now what I mean by that is because we saw yesterday, let's go on Market Buzz. I'm sure I'll find the article here that I can explain it. We saw yesterday gold turning very bullish. And as I got off the stream, I started to notice that there was articles talking about how there's a potential deal being made between the US and Iran. So we have de-escalation on the geopolitical side. Remember how I've mentioned before that during this war, as we've seen energy price shocks, we've seen inflation pressure come back into the scene that has brought back a more hawkish Fed. You have to think about it in terms of like, okay, if that means that gold is supposed to go down because you have a hawkish Fed, you have inflation pressure, the inflation pressure is coming from the continued war in the Middle East, what you could expect to happen when you see negotiations, when you see ceasefires, when you see maybe inflation pressures are not as bad as the markets are expecting, what you'll see is what happened yesterday on gold. So pure speculation in the sense that, let's just find right here. There you go. Let's read this really quickly. I'm sure we'll find some piece of information that will explain our movement from yesterday. So that way we can have that understanding. And again, like I always tell you guys, let's not be lost. Let's stay knowledgeable and aware of what's driving these moves. So that way we can be more prepared in the near future, right? Yesterday was a little bit unfortunate that all the information I started getting was right after I ended the stream. There was no really any way for me to like send it over to you guys and explain it to you guys. This is why we need to open up a Discord group or something, so that way we can be as a community, even if we're not on those live streams, we can still go back and forth in a chat and talk about these movements, right? So yesterday, I'm gonna find this for you right here. So look right here. Found it. It's like my eyes were looking for it. So sentiment on Friday was supported by reports that Washington and Tehran, so the US and Iran, are exploring a preliminary agreement that could include a 60-day extension of their ceasefire, right? So it's not even a reality. It didn't even happen. It's a potential ceasefire, a potential deal being made. But still notice how the markets, they position themselves ahead of time. This is a good lesson for you guys to understand, because you'll notice that a lot of times you'll see certain information get released to the public, but in reality, it was already getting priced in weeks ago. This is a good example of that, because this is basically showing that the market was pricing in a potential deal, the deal that hasn't been agreed yet, but a potential deal. Therefore gold starts to basically skyrocket. You see the bullish price action that came in from the potential of a deal being made, right? That's why, for example, if you see that deal get made, but gold has been bullish all this time, by the time that deal actually gets made, market has already priced that in, you're gonna see most likely opposite effect, which is a lot of times what you guys will see during economic data releases. I'm sure a lot of you have seen an economic data release, and you see that it comes out maybe, let's say, more bullish for gold, but gold does a super deep pullback and it actually sells off. A lot of people will look at that and be like, damn, like fundamentals don't matter. Like I'm over here reading this information. It's supposed to be bullish, but why is gold dropping? But little did you know that that information was already priced in way ahead of time. A good example of this can be like the CPI reports that we look at. When we look at those CPI reports and we see that inflation is higher than expected, and we understand, okay, this may bring more bearish price action to gold now, it's because of the fact that it is expected for the Fed to be more hawkish and turn more hawkish to combat that high inflation. Therefore, that's what puts pressure on gold. So the market is anticipating a hawkish Fed. The Fed doesn't just turn hawkish the moment an inflation report comes out. The Fed doesn't go and do a meeting the moment a CPI report comes out. But the market very much understands that if inflation is higher, and the Fed has already stated anytime that we see inflation going up, like right now, which is what we have been seeing, there's that potential that we might see a rate hike. So what is the market going to do right there when that inflation report comes out higher than expected? It's going to price in the potential for a hawkish Fed or for a rate hike to happen in the future. When that rate hike comes or when that meeting comes where that they are more hawkish, the market is going to do the opposite because it's basically confirming everything that the market has been pricing in. So it's almost as if it's giving a reason for investors to kind of sell off the specific asset that they might be holding, right? You guys can look up this rumor, or excuse me, you guys can look up this saying that they have in Wall Street. Buy the rumor, sell the news. This is what's happening right here, right? You got to buy the rumor, look to get in early, get into that anticipation of the market, position yourself in the market before the actual news comes out. By the time the news comes out, it's always too late. You guys, I'm sure, have heard of that saying that anytime you see Bitcoin on the news, Bitcoin at all-time highs, this and that, you're already too late. The rally has already passed. And now everybody with common knowledge, let's say, that didn't understand how to position themselves before, they're getting late. They're getting in late to the party. It's almost as if they're providing that liquidity for those investors to cash out their money, right? So again, just to kind of show you guys, and even though we weren't looking at those articles as this was happening, we talked about what we wanted to see, right? That's why we talked about both sides of the market yesterday. I'm gonna circle that in right there. Because yesterday we mentioned potential sells before we understood this information. And we understood the sells needed to take place below our area of interest. What candles closed below our area of interest? We didn't have 1 hour candle closing below. 30-minute was also basically above our area of interest, did not close below. It was really only showing exhaustion on those lower time frames. And it was minor exhaustion, which is what we were talking about. We understood, okay, well, if price is going to be exhausting at this area of interest, we need to, for one, let's look for candle closures. So 30 minutes, maybe even 15-minute candle closures. Here we only had one 15-minute candle close below and the next one engulfed it. So at that point, again, we understood below the area of interest and breaks below these lows, that's what's going to signal those pullbacks. Anything above the 44.30s and break of these highs is going to signal obviously deeper pullbacks, extensions of this bullish move. And so with that price action, with that market structure, you were able to possibly adapt, again, if, you know, depending on everyone's position. But I remember someone yesterday, if I'm not mistaken, it was Elijah, that was in buys off the 44.20s. And I was telling him, look, watch out for the exhaustion that you're getting at those 44.20s. But what you need to see is candle closures back above in your favor. Be careful if you see that price action is exhausting, trading below your area of interest, because that's going to increase that chance that you're going to see that move lower and have a correction of this move. But again, you didn't see that. You only got minor pushes back into this zone here. It created basically a low for us before, again, closing back above, breaking those highs, and then price absolutely ripped, right? So fundamentally, that was explained. Technically, you guys have obviously the explanation right there in front of you guys. But just wanted to quickly go over that so we're not entirely lost. You know, like that's what we do. And now looking at gold, price action wise, watch out for the exhaustion you're getting here as sellers start to pause. We want to see, like, for example, this 15-minute candle closing bullish above this area. So that way we know that this support that has been created in the past is still being respected. There's still that possibility and that probability that you could see price push off of these 45, let's call it the 45.15s. You know, above 45.15s. Again, look at how this 15-minute candles, like here, created this support, kind of like a break, a retest, failure to really close back below the area. Then you make your push towards the upside. So that's what we want to see. We want to see price pause, stay above, close above, confirm that as a support for us to be able to hold on to our trades or look for more retests, and then we can be on the lookout for that extension. We have plenty of range and room to continue with this structure here. Like you can see just how clean that bearish structure, or excuse me, that bullish structure is right there. Good morning, Elijah. Yeah, Discords would be very convenient for any questions after stream. Also to send trade results, we can always go over on days that price is ranging or just slow. Yeah, exactly, I agree. Yeah, yesterday, like we ended the stream, and then I'm here looking through articles, and I see that there is the potential for that deal. And in my head, I'm thinking like, okay, but that's not a deal that's actually being made, but yet still price action was very, very bullish. So at that time when I was reading that report, for me personally, I understood, okay, since it's a potential for a deal, and the markets are pricing it in this strong, I want to see the breaks above our area of interest. If we break above this area of interest, then that's how you know the market impact is going to be very strong. Because if not, we're just going to get exhaustion here and probably another sell-off. But that's not what happened. We had price break above our area of interest, closed above, had a minor pause, you can say, looking at this on the 15-minute time frame, and then overall just continued to absolutely rip. So again, it's fun and it's good to see how majority of these moves or these shifts in sentiment, they always get explained by the deeper fundamentals, and then you can just see just how well those technicals are going to align with that. But all right, we have our gold analysis. Let's go ahead and do a review of US 30 since we're nearing that like 40 minutes away from NYSE open. But yesterday US 30 got super volatile because we understood below the 50,000s 530s or 50,520s really, these lows, we could expect deeper pullbacks to take place. Those pullbacks were in like 2 minutes. In like 2 minutes, price absolutely ripped, came all the way to these lows where we pointed out, watch out with these lows, and you want to make sure you get candles to close below that area, like a 1 hour candle close, 30-minute candle to close below that zone. You didn't get that. You got just price reaching this zone where you have strong buying pressure coming in. I even pointed out for you guys how, for example, in here, you have very strong sellers, very strong selling pressure, and it yet still paused around the 50,000s, 375s, right? So that's why I was saying, like, look, guys, unless we really get that candle closure below, I'm thinking we can still see bounces off of this area, but the buy zone really, because I thought this was far too risky to take buys as price action was just melting. Like this was literally, like if we dive deep into this was on the 1 minute. It happened in 2 minutes, or maybe even in 1 minute. Honestly, watch. I think in 1 minute, price just went completely from one area of interest to the other. Where was it? This was yesterday, right here. So look, once you broke those lows, it was a goner, right here. Just you broke the lows, went all the way into this area of interest, this previous support. You can see you had minor breaks below because you have your candle closures closing pretty weak. And then that was followed up by a push towards the upside. We had the sell idea below the 50,000 520s. You can see that played out shortly before, again, the hopes or the optimism that came in with the war in the Middle East. That's why, in my opinion, what pushed what pushed US 30 towards the upside, right? That optimism what pushed US 30 towards the upside there. And then you can see just once again, this is why we use those areas of interest to our advantage, right? Let's go to the price action. You can see again, price action closing back above your area of interest and how you did not get back below the 50,000s 520s. And all you saw above that was just continued buying back into these highs. So we had our sell zone below on point, buys above this area on point as well. Yesterday with so much volatility in the market. Excuse me. Sorry, this is why I can't be reading the chat. I get distracted. My bad. But anyways, the sell zone below that played out, buys above that area with proper candle closures above and proper confirmations. You saw just how clean like that break and retest was on those lower time frames. Sorry about that. My goodness, why is this? Where is it? There it is. Sorry about that, guys. But yeah, look, the break above and the retests came in those lower time frames, the failure to get back below, and then you had your continuation take place. So now going to continue to follow that bullish bias here on US 30. What I want to do though is I want to adjust this zone to these highs right here around the 50,725s on US 30, which is where this resistance was created right here. And then you had that push above that area. We have this as our next area of interest. I'm gonna mark it off a little bit lower, kind of closer to these candle bodies here on US 30, around the 50,875s, and this previous area of support there. So that would be that area that we could possibly reach as we continue to trade above these highs. So I would still be on the lookout for continued buys. Just watch the pullbacks and watch the extensions and those continuations as we continue to follow this bullish structure that we have here on the intraday time frames. So we'll look at US 30 closer to NYSE open. So we got about another 30-ish minutes, more or less, 35 minutes. The other one that we did was USD JPY. So USD JPY ended up breaking. Yesterday it got super mixed. They got a little bit choppy during the time that we were doing our analysis, because we understood below 159.400s, that was our sell zone. That's why we wanted to see candle closures below for us to be on the lookout for pullbacks into these lows right here. And although it did happen, although price did push from the 159.4s down into the 159.2s, that was like 30 pips more or less, which you know on Forex is decent. Yeah, almost about 30 pips. So let's call it 25 pips of a move towards the downside here. Excuse me. But again, the only thing about that was that it got a little bit messy around that area, because you had candle closures below, liquidity grabs and candle closures back above, and then it's like you broke highs, but then you ended up breaking back below. You get me? It just got very back and forth, a little bit messy around that area. So that I can understand how it can be a little bit difficult to take advantage of that, because even if you were right on the analysis for yourselves, you still had to deal with price getting back above your zone, breaking certain highs, where at that point, these highs, we had marked this off. And I had said, if we start to break those highs, be careful if momentum picks up above that area and we can see a steeper move towards the upside. Because yesterday we were bullish above that zone. Above this zone, we were following this structure: highs, lows, higher highs, higher lows, higher highs, higher lows. So we understood above 159.425s and breaks above 159.475s, that's where we can see further and more pushes towards the upside there. But again, we didn't get that. It got a little bit messy around this zone. Then you ended up making your move back towards the downside there. So overall, let's just quickly do a UJ analysis here. It's still bullish on the daily time frame, above this area, especially 159.2s. 4 hour, we have a higher high, higher low, higher high, higher low, and then a higher high. So we still see how price is slightly closed below this structure point, but then once again getting back above this area. So above this area here, I would continue to be on the lookout for buys on USD JPY, especially with dollar continuing to bounce off of this support, which is this low of the range here. As dollar continues to stay above the support, I'm thinking that can continue to support USD JPY buys, but we just got to make sure that we stay above those 159.2s. So I'm gonna mark off 159.200s on USD JPY. That would be our buy zone, and then further extensions above the highs as well, which is again the 159.4. So if you start to see candles closing below 159.200, then that's where you have to watch out in case price is gonna do a sell-off and you break those lows and you have this clean range right here to potentially correct down into the 158.800s right there on USD JPY. All right, so mainly looking out for buys on UJ, gold as well, or excuse me, US 30 as well, mainly looking out for buys. Only really would look to sell if we get candle closures back below this range, where in the past we've seen as candles close below the range, they make their way down into this area. That's on US 30. But as we trade above this zone, still looking out for buys. And then gold as well. As we continue to trade above this zone, this area of interest, we'll still be on the lookout for buys. All right, guys. So mostly really going to be waiting on buys on most assets there. But we'll see. We could have the 45.15s is a okay range, in my opinion. Ideally, 4,500 buys would be a lot better, but then at that point, you would have to wait for the whole pullback to take place, you know? So it's a little bit tricky. All right, my bad. My bad. I thought someone had written something in the chat, but I'm not seeing it. I apologize if so I read it and then I got distracted and then now I don't see it. So sorry if I made you feel bad. It was my fault, not yours. But all right, guys, let me ask, how was your trading month? How was your trading week? Have you guys taken, how many trades have you guys taken this week or this month? We're about to end that first month of us doing live streams. I think we started, on like the second week of May. I believe it was. It was after like NFP had passed, I'm pretty sure. So next week will be that first week of the month. That means you have all the labor market reports to look out for. So we'll be on the lookout for NFP next week. We have mainly labor market reports, I'm pretty sure. Like if I look at that right now, let's go to the economic calendar here. Oh, and by the way, guys, what a good find earlier right here. That was easy too. Like literally, we went on Market Buzz. Click on the article site. Like if you guys have, by the way, on Gates, you guys can make an account on Gates completely for free. And I personally will choose this over Forex Factory or even Trading Economics. Like in terms of like what the free sources online, this would be, in my opinion, the best. Because you have your economic calendar, keeping it simple, and then you have your Market Buzz. The trade ideas is also cool, but for the most part, since we do such deep analysis, we, for the most part, really come up with the same trade ideas. And we want to make sure that we also do our own analysis before we go into like other people's ideas, including myself. Like you want to make sure you have your own analysis set up and good, and maybe use my analysis as confirmation. Or if we might have different analysis, talk to me about that. Why do you see something different? So that way we have those points of view. Maybe you see something I don't, maybe I see something you don't, but as long as we're here as a community and not really looking to beat each other, let's just say, or be better, then it's like we're all just gonna be able to improve naturally. But like I was saying, so if you go to Market Buzz, again, this is free, guys. Literally, you can make an account. You have the link in the bio right here in the description. And again, you can make a free account and you'll have access to this. So on GatesFX, Trading Central, you have your economic calendar, trade ideas, Market Buzz. Market Buzz is where I get my news stories, like my articles. So I'll go on to mostly commodities, and then you have gold, you have crude oil, of course. Like if you look at currencies, you'll see USD/JPY, right? Like you're gonna get a good amount of articles here. But for the most part, I'm looking at gold, the commodities. Then if you scroll, you don't want to get crazy and read every single report. I like to read the titles, and then I just go based off of that. So like maybe even, or the one that I found earlier, or whatever, it's right here. Just so you can have that idea. Let's see, this one doesn't really have, this one is just more of an analysis there. This was one that we found earlier. This one gave more of an actual deeper breakdown right here. For the most part, I tend to really go over this. I just want to know the reasons. I just want to know the reasons. I go and let the technicals do the explaining for me. I don't like to read technical analysis from people online. I like to get the information because I know that these are economists that are trustworthy. And then you have your explanations. For the most part, the articles will get to it quick, right? So here you have gold prices edged higher on Friday, hovering near the 4,500s level as investors balance cautious optimism over a possible US-Iran peace framework against the persistent uncertainty about inflation and interest rates. It's everything that we talk about, you get me? But you have more of a, let's say, more of a proof in front of you because you see that these articles get made. But for the most part, we already talk about this ourselves. We're very familiar with these things. This was what I read earlier. Again, the possible deal there. Look right here, for example, you have, read this. Let me know. I want to, before I explain this, I want to know if you guys understand the message right here that I'm about to read. So pay attention to this. Let me know. This could have been right here a giveaway. So I want to see if one of you would have won that. Because remember, next week we're going to do another giveaway. So let's just say this would have been the question. Let's see what you guys have to say. So if you read an article and it says, the prospect of reduced geopolitical risk eased concerns about further oil-driven inflation spikes, which had previously strengthened expectations of a tighter monetary policy globally. Easing inflation fears have in turn supported expectations that the US Federal Reserve, the Fed, will keep interest rates unchanged for the remainder of 2026, providing some floor under gold prices. Let me know what you guys get from that. And it's you don't have to get crazy about it or technical and write up a whole paragraph to explain this. I just want to know if you understand the basic meaning of this message right here. And I said this earlier. Or I'll make it even easier for you guys. Let's go a little bit lower. Gold's performance in 2026 has been shaped by two competing forces. When energy-driven inflation fears dominated sentiment in February and March, gold fell sharply even as geopolitical risk rose. Why? Because investors priced in higher interest rates that reduced the appeal of non-yielding assets. In our translation, gold bears. You get it? As ceasefire hopes have cooled oil prices and eased rates expectations, gold has partially recovered from its trough. Let me see, Paul, break-even will work on direction recognition. If you have, I can help you with that. So let me know if you need help with that. AD, yo, I am a great day. I call you AD, that's good? Is that okay? I took some bad ones, but also made a few ones. Not ready to send a trading plan yet because I'm still narrowing down on my full strategy. You need to have a trading plan, to be honest. There's no full strategy without a trading plan. You shouldn't be back testing or live trading without a trading plan. The trading plan is your foundation. Your trading plan is where you get to write out what you're doing. And that's where you get to see whether what you're doing is right or is good or bad. Or not even good or bad, we'll see if it's working or not. You get me? Bro, it sounded like you were reading in cursive. I apologize. Didn't understand any of that news article. You're saying because I don't know how to read or because of the information? Let's see, Juan, dollar strength. Dollar strength is one. If the dollar is strengthened, then I would think bears would take over. Unsure. Basically, what I'm trying to explain for you guys is that you have basically two sides of the market right here, which it's telling you in this article. On one side, you understand, well, the reason gold falls when we see geopolitical tensions escalate. So let's say more strikes, further conflict, everything right here. Anything that has to do with war and continued war, block in the Strait of Hormuz, all of that right there falls into the, let's say, the bearish sentiment for gold because of this right here. Because of the energy-driven inflation fears, right? Because of the fact that when you have these inflation fears, where did I see that? When you have the inflation fears, I thought I saw it earlier. Where is it? Okay, so when you have those inflation fears, this is what you saw happen. You saw strengthened expectations of tighter monetary policy right there. Tighter monetary policy, which is what Juan is saying, it equals to dollar strength, right? So what I'm trying to do is connect the dots for you guys. Basically saying, okay, well, if we have war and we have continued a blockade in the Strait of Hormuz, and we see that inflation fears continue to dominate the sentiment in the markets right now, it's expected for the US Federal Reserve to be more hawkish, to have tighter monetary policy. If you guys go on Google right now and look up tight monetary policy and what that means for the US dollar, you're gonna see that it usually will strengthen the dollar, right? As you have bonds basically go up, and you have a lot more investor activity and in the bonds and those safer assets. Basic translation right there, so it's not cursive for you guys. Dollar bulls, which in turn pressures gold, and therefore we have bearish price action on gold, which is exactly what we have been talking about, and it's exactly what we mentioned on the days that the CPI report came out, which we'll go and we'll point out. That's the other beautiful thing about understanding the markets and being aware of those moves. We know exactly where that happened. It was this range. Go to Tuesday at 8 in the morning. Tuesday, May 12th, 8 in the morning, that was your CPI day. Look at those. That was a CPI day that inflation showed that it was higher than expected. Going along with this, saying if it's higher than expected, that brings inflation fears. Inflation fears equals to more tighter monetary policy. Tighter monetary policy equals to more potential of dollar bulls. More dollar bulls pressures gold. So you see how we connect the dots. It's not about being, how do I say this? Like, I don't want you guys to get stressed about understanding the articles, because I know it can be a little bit difficult when you're reading these things. You're like, what does that have to do with gold going up or down? But when you have that understanding and you can pinpoint what information matters, that's what you take onto the market. So again, I repeat myself. Inflation fears brought back a more hawkish Fed. Hawkish Fed means more dollar buys, dollar bulls, and therefore gold has been on the run down. What did we explain on this day for CPI? If inflation is higher than expected, be on the lookout for dollar buys and further weakness on gold. That's what happened that day. The following day comes and you have PPI, same thing, inflation higher than expected, gold dump. Gold continues to dump. It doesn't really do a massive dump, but it still moves lower and then just overall stays ranging before finally, I believe you had more conflict in the Middle East. Gold ends up just dumping as more conflict continues, because you have more conflict, meaning you can see more inflation fears later on, because that conflict directly impacts that inflation. But you see the price shocks in the energy market, in the energy sector, and therefore that's the movement on gold. Does that make sense for you guys? That needs to make sense for you guys. If not, I need to explain it to you. Because it's as simple as that. It's one or the other. And then notice how yesterday you have the potential of a deal being made. That means that everything we just talked about, the war, everything happening in the Middle East, the potential for inflation to keep going up because of those price shocks in energy. Well, if you're saying, well, this can stop now, possibly. Now we might see regular movement through the Strait of Hormuz. We'll see ceasefires. We won't see conflict escalate. What is that telling you now? That's now telling the market, well, if the war is going to end, maybe those inflation fears that we're seeing right now could be temporary. If that's temporary, that means that in December, the Fed won't have to raise rates. If they don't have to raise rates, and that's what we've been pricing in, what is the market going to do? It's going to flip on its ass. Sorry. But does that not make sense? It's one or the other, and it's just as one basically overpowers the other. So as you lose focus and the market goes from inflation fears hawkish Fed to the potential for a deal being made, and that can potentially disappear, the market moves ahead of time, and there you have gold now from yesterday, from when that was happening. Let's say we measure from here. That's like over 1,000 pips worth of movement right there, if I'm reading that correctly. Does that make sense? Yes or no? Is that better than what I had said earlier? Sorry, I apologize if I got mixed up earlier with trying to connect things, but I think that second time I explained it better. But now, again, now you guys understand that. Now you have that understanding of, okay, when we see conflict, expect those inflation fears to continue, expect dollar to rise. I'm saying expect it. Not it's going to happen, but expect it. That means you can look at price action and wait for those technicals to align with what the fundamentals are showing you. Meaning if we don't see what I'm trying to tell you guys is, imagine we don't see this peace deal take place. Imagine we see continued conflict in the Middle East. We right now, as we speak, I believe Lebanon is, has to deal with strikes from Israel. There's still conflict going on. It's not like the war is over. So if we continue to see conflict, the ceasefire deals they violate them, whether it's Iran, the US, Israel, whoever it may be. As, let's say, the blockade continues in the Middle East, in the Strait of Hormuz, and you continue to have inflation concerns in the market. What does that mean for the market? That you could see potentially a more hawkish Fed to combat that high inflation. And again, same meaning. Hawkish Fed, dollar bullish. Hawkish Fed, gold bearish. That makes sense? Okay, I see a few more people now saying that makes better sense. So if Feds are holding interest rates, then USD X will hold position, and that will increase gold interest. Yeah, if rates, what you're basically seeing, I just don't want to make this too confusing for you guys, because now we're diving into the speculation. Because again, it's all speculation from the Fed. But what you're basically seeing is a potential shift in the narrative, which is the narrative has been, we might see a more hawkish Fed. Yesterday, because of this deal that was made, the deal that could be made, the potential for the deal to be made, the markets are now showing us that they believe that the deal is going to be made. Therefore, inflation concerns can come down. Therefore, the Fed won't have to raise rates. They'll just keep rates as it is. They're not going to cut rates either, but they'll just maybe leave rates unchanged. That was enough for gold to continue to flip and shift out of that sentiment. But the other thing is, you don't want to read one fundamental piece of information and think this is going to shift sentiment. Just follow structure. Understand, like that's what I did yesterday. Yesterday, I understood that the information we had at hand could keep dollar a little bit more bearish for the time being, but I'm not gonna sit here and think, oh, gold is gonna fly. But what I will do is point out my zones of interest, where I was looking at yesterday was 44.60s. If we break above that, that's clearly holding more market impact. That's clearly what the market is pushing right now. That's what you have to follow. But who confirmed that for you? After you got your why, you then get your how. I'm not sure if you guys have heard me say that. The fundamentals will give you your why, the technicals will give you your how. So you got your why, as if to like why gold could continue bullish, why dollar could continue bearish, but now you need your how. How are you gonna actually confirm that? Well, you need your breaks above your resistance and your candle closures above if we're using price action clues to our advantage. That's what we got. Candle closures above, gold ripped. It was just gone, But it's connecting one with the other. That's usually how I always talk to you guys. I'm not sure if I ever told you guys that let me see. Xuan, risk on or risk off? Risk on, dollar investing. Example, stocks, crypto, riskier assets. Xuan knows what he's talking about. Yeah, but that's facts. Risk off, investors flood to safe havens like gold and energies. And bonds. That's the other thing right there. But when you see bonds skyrocket, a lot of times you have gold come down. So if that's why you want to pay attention also to bonds. Because if you see that then this is what happened during this war, that you started to get that risk off sentiment, And the popular belief was gold needs to go up. But in reality, bonds were being inflated and gold was being sold off. So that was a little bit of a curveball that the market threw, but it's still very much well explained. And I think I've told you guys why. If not, I'll be happy to explain that to you guys. But all right, let's go look at US 30. It hasn't done a full pullback yet, but we'll watch out for that. And then UJ, it's kind of just paused. USD JPY is super slow. We'll see if we could do a deeper pullback, get better entry points and rejections, and then really look out for those buys. But right now it's looking pretty slow. But yeah, Joan, what you were saying there with the risk on, risk off. AD, you didn't answer me earlier. By the way, my bad. If I can call you AD, unless I'm confusing you with someone else. Mr. I am great day. Tighter monetary policy, dollar bulls. Tighter monetary policy can be put into the words of hawkish. Like you could just say hawkish. Fed is being more hawkish. You have hawkish Fed and dovish Fed. And one supports the other. When you have a dovish Fed, that's because they're talking about maybe lowering rates, or you have quantitative easing, or money being pumped into the markets. When you'll have a dovish Fed. Oh, let me take this out. You have dovish Fed when they're looking to stimulate growth. So that's why they lower rates, because when you lower rates, you're giving investors the incentive to either hold onto their cash and get no yields because rates are low, so your yields are not that high. So you would rather grab your money and throw it into riskier assets, so that way that money can grow and the economy will grow. AD is cool? Okay, my bad. Oh, okay, you did answer me then. I apologize. But did that make sense? That's a more dovish Fed. Again, trying to stimulate the economy. When you have inflation maybe coming down and the Fed needs to pump the markets and they need to give people incentive to go and maybe buy, that's why you have lower rates. That means lower rates for cars, loans, houses. That's when you see people doing, there's more activity basically. The Fed is trying to get the economy to heat up. That's when you have a dovish Fed. And then hawkish is literally just the opposite. You have the economy overheating, too much going on, inflation is going up. High inflation we know is bad because that just means that you have everything is more expensive. So too much money going around is just as bad as no money going around. So what does the Fed do to pause that activity? They need to increase those rates. They need to maybe pause their activities on flooding the markets with money. They're now giving investors more of an incentive to, instead of you risking your money to gain, I'm just giving a random example. I apologize if it's a bad one. 3 or 4%. If you're investing 10 million, whatever, and you get back 3 to 4%, but now they're giving you the incentive that, the yields are at 5%. That means you don't have to risk anything. You could just hold money in bonds in a safe asset, and your money is gonna grow more than it's as if you were to go and risk it. If you go and risk your money on some crazy AI deal that you can maybe get 3%, or you can hold your money here in bonds and gain 4 or 5%, what do you think the investor is gonna do? They're gonna go into the safer asset, the bonds. So again, that's where you have less activity in the economy. So if you study the cycles of the Fed, they're either hawkish, dovish, or neutral. Since we've seen so much happening in the past couple of years, like really, if you think about the markets, anywhere from like after 2020, that's when you really started to see macros really dominate the markets. Like, yeah, you had, for example, like if you go back, let's just do history class. If you study the markets and you look at those enormous waves in the market, you're gonna have the 2008 global financial crisis, right? So you'll be able to understand what happened during those times, how the Fed responded during those times. Another crisis that you can think of, COVID, the most recent one. Like, let's not even go that far. But you have COVID, again, another crisis that took place. Go and study how the Fed reacted to the COVID pandemic, which is, what did I just say? Let me give you guys another me see that. No, yeah, gold is continuing to bounce. So yeah, those buys that we were talking about, like we were saying earlier. So Elijah, good stuff. That's how I want you guys, making money, man. But yeah, gold above our area of interest, still pushing. We just want to see if we can retest those highs. But so far, off of this push, about 140 pips. So that's clean. Good one right there. That's what we were talking about earlier, when we saw like that 15-minute closing above, maintaining that area of support. You had the 5 as well, pulling back into this area, exhausting and closing above. And the 30-minute candle is about to close soon. But does that make sense, guys? Hawkish, dovish. It's pretty simple. If you don't, like, obviously you can get very technical. You can go do deep dives into the Federal Reserve and all of that. For the most part, I always just like to translate it into basic terms for me to then trade that, you know, with price action and not be completely lost. But again, study those cycles. Look at those. Do you think we're headed towards an AI bubble? It's most definitely a bubble. I would think so. Something that doesn't make that much money, yet has all the investment and has the most money being pumped into it, that's a bubble. But again, the COVID pandemic, imagine the economy shuts down. You have stores shut down. There's no activity going on. Nobody's investing, you know, like for the most part, you have a global pandemic. Everybody's at home, locked in. There's no activities. People are not working. How is the Fed going to respond to that? Can you guys give me that answer? If you just saw a shutdown on the economy, there's no activity going on, is the Fed going to be hawkish or dovish? If I just told you right now, there's a global pandemic, no activity is going on, we need to save the economy before everything goes to shit. How is the Fed going to respond to that? There you go. People are paying attention. That's fucking cool, dude. But yeah, exactly. Juan, yeah, man, I appreciate it. And it's the truth. It's, you know, your fundamentals give you your why, technicals give you the how. It's a combination. It's a beautiful balance in between them. But exactly, dovish, lower rates, easing, lower interest rates, turn on the printers, burr. Yo, I like this Juan guy, dude, because he knows. Exactly, flood the markets with money, facts. Everything that you guys right there, that you just said, 100% true. So if that's the case, what should dollar have been doing during that pandemic? Like, let's say around, let's call it early 2020, mid 2020, the Fed is dovish, creating more inflation is a side effect. They're flooding the markets. Imagine flooding the markets with money. So they're literally, it's almost as if they were just giving out money. They're telling people, please go spend this, please go do something with this, please, please, please. They lower rates to freaking 0%, I think. What should dollar have been doing during that time? Like, we should be able to go and prove that right here in front of us. 2020, early 2020, mid 2020, we had a dovish Fed. The pandemic was very much active during that time. If we go right now, you're telling me we're gonna see the dollar going down? Let's see. I don't believe you. No, I'm kidding. You know damn well what was going on. Let's look at that we'll do it on the daily. We got all the way back. Bing, bing, bing. Well, 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 would you look at that? So you had, right here, let's study this from the beginning. This was January 2020. Around the times that you had the pandemic start, you saw dollar for a moment. Because remember one thing very important right here. This might throw you off a little bit, because what you guys got in terms of like the dollar should have been crashing, that's on point. That's facts. But remember, another thing is that the dollar is a global reserve currency. It is considered also a safe haven. It is considered an asset where if the globe is going to shit, the dollar is going to hold its ground, because it's going to be that trustworthy coin that you can hold during those times. But overall, as the Fed shifted out of their narrative and they started to then pump and flood the markets with money for months, look at the dollar. You could zoom out and just see that. And we could do a deeper breakdown on this. But you guys can go and study this yourself. But basically what you guys just said surprised me. I appreciate you guys for paying attention, because again, that's it. I'm showing you guys this not for like funsies. This is because you need to understand that the market creates cycles. And if you're aware of that current narrative, that current cycle, you're going to be able to trade with more knowledge, and you're going to have information in your head for you to validate that bias that you have. So that way it's not just you looking at candles and thinking double top, go for it, you know? It's information. It's not made up things. It's just simply data, information and clues that you get. Not a certain thing, but it's still what gives you those clues. So again, look at all of 2020. In all of 2020, if you understand the market narrative, you were able to follow the flow of the market, the overall flow. Notice how you still have moments where you do go up. Sure, price needs to recover. Price moves, up and down. It makes its waves. So you're very much aware of that. That's why you're aware of those technicals still. So during those times where price action might be going against those overall fundamentals, you know what needs to happen for those fundamentals to continue to impact the market. You know what levels you need to break below. You know what levels you need to stay below, right? Then, how do you trade successfully with all the market manipulation? I mean, that's out of our control, because those are things that we shouldn't even be too worried about, to be honest with you. Because the markets are for what they are. They simply exist, and we're here trying to make sense of it. We're lucky to have, I would say, technicals and fundamentals to give us an image of that. Because a lot of times you could say, like, if you have your fundamentals very much on point, you could basically close your eyes and understand where the market has to go. But you don't control, or you have no control over when that's actually going to happen. So the technicals is the one that proves to you that that is going to happen, But the technicals are always going to need to align to those fundamentals. It's not one or the other. When government prints money, it weakens the dollar value. Exactly. So you had, imagine during that time that we were just looking at the dollar right here, during 2020, you have lower rates, money printer going brrr, literally just flooding the markets. So there was other assets during that time. If you go and look at this, for example, these times, and then connect that to the stock market, and you ask yourself, where is all that money going? If they're printing out trillions of dollars, we're not talking about millions here. We're talking trillions, tri with a T, trillions of dollars, okay? Where's that money going? Let's look at those times, those March. This was really around the time where all of that started. In somewhere in mid-March, that's where all of so you see how the markets, they're so clean. Just as the pandemic was starting, the market starts to position themselves and they go into those safe havens. Dollar gets pushed towards the upside as the market seeks that safety. The moment the Fed flips that narrative, I can guarantee you, I look up the article of when the Fed started to lower those rates and talk about that dovish monetary policy. I guarantee you it was around the 20s of March. That's a guarantee. But then look at those times. Where's that money going? Let's just look at a random US 30 chart. Look at the market crash. Market crashes because obviously there's uncertainty, global lockdown, no economic activity, markets crash. This is where you talk about manipulation. We're gonna get canceled talking about this. Markets crash, Fed flips their narrative, starts talking about, you know, the dovish monetary policy without even diving too deep into it. The money has to go somewhere, guys. Look at US 30. Precisely 20s of March. Look at US 30. Running it up all to all-time highs. Almost as if you could say that this was a event fabricated to crash the markets to then just recover them. Rich get richer, poor get poorer, right? You guys have heard of that? Yeah, we're getting canceled. But you see it. Go look at SPX. S&P 500. Let's go to March. The money has to go somewhere, guys. It doesn't just disappear. Would you look at that? Markets crash. When was that? Global pandemic. Markets crash. The Fed flips their narrative, turns dovish, floods the markets with money, lowers interest rates, starts to boost economic activity. The money has to go somewhere. There you go. Same exact pattern, same fundamentals, same fundamental drivers, almost the same technicals. There you go, all of 2020. Look at NAS. Let's go do the same thing. 2020. The money has to go somewhere. Look at the crash, global pandemic, dovish Fed, and the recovery. Rich get richer, poor get poorer. Yes or no? Yes or no? All by understanding whether the Fed was dovish or hawkish. For the most part. Obviously, it gets deeper than that, but that was the main idea. Let's go back to price action now. Let's go back to this reality before we dive into those rabbit holes. But you guys see what I'm talking about? Yeah, US 30 continue to give those bullish opportunities up back above that area. It did a liquidity grab, it looks like, US 30, and then it just overall continued with the bullish market structure we were following. USD JPY just ranging around our area of interest, hasn't given us that full pullback that we want to see. It's kind of literally stuck in a range. It looks absolutely disgusting, this price action. And then gold gave us that move as well. So both US 30 and gold today have given us those bullish moves above our areas of interest. So overall, not bad for a Friday, the last Friday of the month, which a lot of times I've seen. What's a liquidity grab? This is a liquidity grab. But the thing about liquidity grabs is you don't know it's a liquidity grab until after it happens. That's the thing about liquidity grabs. But liquidity grab is basically price action showing you one thing and then faking you out. So in this case, it's showing you buyer strength, claiming above previous highs, above an area of resistance, followed by a candle that erases that. And I mean erases because it's basically a bullish candle overpowered by a much stronger bearish candle that basically, think of it as Pac-Man. It basically ate up that candle. It closed back below the zone and then dropped. That's a liquidity grab. Basically like trapping buyers. Like if imagine you were buying at this area, you got trapped buying above the zone and then price sold off. Liquidity was grabbed. Thanks for the fundamental classes. No problem. I didn't plan for that, but if you guys ask the right questions, you will see me rant. But no, I appreciate you guys for listening. And I say it not to bore you guys, and I know it's a little bit different from your usual typical streams, you know, but it's information that is valuable, and it's information, you know, for the most part, I know you guys don't know me, but I promise you I'm not gonna waste your time. Whatever I say, it's my own experience, it's my own knowledge, it's things that I've researched, it's things that I've talked about, things that I've proven to myself, things that I've traded. Because that's one thing, you know, to talk about something that happened in the past, very easy to do. Anybody can look smart doing that. But the real deal comes to the day-to-day actions, how you use that information to your advantage. Because you can know all about the markets, but then not know how to use that information to your advantage, which is something that happened to me for a while. You know, I have gotten very obsessed with fundamentals or obsessed with technicals. And like I tell you guys, you know, I didn't have a trading plan. I didn't have things set up correctly. I would get married to a bias without really paying attention to the technicals because I thought that the fundamentals were this and that. So again, that's why when I tell you these things, you know, take it with a grain of salt, research it, prove it to yourself. If you have that commitment and that level of drive, especially when it comes to the markets, I mean, let's be real, you're trading the financial markets. This isn't a little game here. This is a very serious industry. If you have information to go and learn, that's valuable information. Notice how I'm not selling you a strategy. I'm not telling you do this and you're gonna win. I'm more so telling you be aware and you're going to have a better edge in the market. You see the different approach? Because again, that's what, in my opinion, will make you, myself, better traders. That's how you get a group of people to really get inside of an office and trade together and make real money. The real traders. I got grabbed. Yeah, those liquidity grabs are tough. But I see a lot of people talk about, oh, I'm gonna enter after the liquidity grab. How do you know there's gonna be a liquidity grab? You don't know that. You can assume it, but you don't know what's gonna happen. So I think for you to sit and wait for liquidity grabs, unless you have like a proven set strategy that it's like, no, I know when this is gonna happen, which is, if any trader tells you, I know when this is gonna happen, don't even listen to that, because we don't know nothing, you know? Things can change in an instant. Trump can make one phone call, the markets will completely flip. One press conference, the markets flip. One tweet from Trump, the markets can flip. So for you to sit here and be like certain all the time is just nonsense, because again, anything can happen at any time. It could be someone in China, a billionaire in China, decided to sell off gold, and that suddenly caused the market to crash by 1% for the day, because his position was so high it triggered other algos to sell off at the same time he was selling off. Like the algos trying to catch up to the information, thinking like, well, if this guy's selling this much, we're gonna sell a little bit of it. Overall, it gets combined and the market drops 1% that day. Why? Because some billionaire tycoon in freaking China decided to sell off gold today. You know, you're not gonna know about those things. He needs to make that call right now. I mean, hey, so far everything we've talked about today on point. The bounce off of the 45.15s, because we didn't get the further breaks below. We understood if it breaks below that area of interest, gold is going to do a deeper pullback. But it was creating a higher low point at that area, so we understood if it can pause here and exhaust, then as we've seen in the past, buyers step in from this area. Let's wait and see if we can get that full retest of the 45.40s. We're fairly close. This is almost like 200 pips, or yeah, basically 200 pips worth of a push. US 30 is the one that for me, it's a little bit tricky because it's just so volatile. Like, look at that volatility that kicked in. This was at market open. Price, this is a liquidity grab right here on US 30. Because price is dumping below an area of interest. At that point, price action wise and momentum wise, you can understand we've seen sellers step in below this area before. We need to maintain below that area, so that way we understand technically this is how sellers are still dominating the market, because you have buyers failing to trade above your area of interest, but price broke below and then basically immediately in less than 2 minutes was back above the area. This would be your liquidity grab. The fact that price action again got below and then right above, quick, you got grabbed. Like Juan, maybe that's what Juan was talking about. and then it continues, and then you end up having a full push to this next area. So here you can say it was a liquidity grab. Sellers got faked out at this area before buyers stepped in, or sellers got trapped and buyers stepped in and pushed price into our next area of interest. So US30 was good, and gold today was good. Today was a pretty good lesson. We had a nice little fundamental breakdown. The technicals were on point as well, respecting our analysis. So we had some people in the chat, which I saw today, more people, took a few more trades. So there you go. Remember, the talks are fun. They're knowledgeable. They're good. You know, take your notes if possible. But remember, we're here to trade. We're here to make money. So we always gotta stay focused. So for those of you that are sharing your trades, I appreciate you guys for being here, for sharing your trades, and for having that level of focus to be able to listen to me and then still be able to connect the markets. So good one. Good stuff today, guys. Since I started marking my chart like yours, my winning streak has increased. I just look at zones, not FVGs or not FVGs or order blocks. That's ICT, correct, if I'm not mistaken? Yeah, look, I don't like to talk bad about strategies because, you know, everybody has their own winning strategy. But when it comes to strategies, remember, strategies, I don't even want to say it, but they're kind of pointless, guys. Like, let's be real. Sorry if I'm going against someone, but let's be real. Strategies are not the best. You need to have market knowledge, market awareness, and you need to come up with a system for yourself. You don't need a strategy from, let's not point out any names here. Let's be professionals, guys. But you get me. When I'm over leveraged, yeah. When you're over leveraged and you have tighter stop losses, that tends to happen. Elijah, don't laugh. But it's true, man. Come on, you guys know this. I can hand you a strategy right now. I bet you'll try to follow it and you're gonna fail, because you have different perspectives. We have different brains. We're all wired differently. You can't expect to just learn a strategy from someone and then become a profitable trader. I genuinely, sorry to get into this topic, I genuinely don't know a person that has been like, yo, I grabbed this person's strategy and I became a profitable trader. I don't know one person. Every profitable person that I've met all talks to me about them creating their own system. Same concepts, right? Technicals, maybe even some ICT people, right? That's why I don't like to talk bad about ICT. I used to talk real bad about ICT back in the days. But now I've met people that have ICT concepts, but they've created their own system that's going to benefit them and that they can get profit out of it. It's not just go on YouTube, learn a strategy, go here, and then boom, profitable trader. $100 to $1 million. There you go. Boom. It's not like that. It's about market knowledge, market awareness, market experience. You need to yourself get through this motion. You know, go through this roller coaster and really discover yourself. Like you guys need to realize that that's another thing. Trading is all about self-discovery. Trading will expose you of all your weaknesses, all your flaws, your impatience, your greediness, your ego. Trading will expose all of that. You know, trading is like that one industry where it's like you need to become the best version of yourself to truly gain the most profits out of the market. I don't really know of any other job that really does that. Like, I'm sure there is. But for the most part, every other job is really just about like following certain systems that are already created. Here, you already have systems created and you go and try to follow that and you still fail because your psychology can't handle maybe following a specific strategy, you know? So it's like trading is a tough game, man. You have to really know yourself, know what you're doing. If not, you will get exposed. The market will expose you. I was, for one, that was not humble enough to accept that reality until I got humbled, like truly, face planted with the charts. Back against the wall, broke, no money, no options, no nothing. It was horrible, horrible experience, honestly. Like, trading is tough, man. That's why I do what I do. Because I know for a fact, if I would have been walked, you know, with almost like my hand held, how I try to do for you guys, in a non-offensive way, of course, I'm trying to give you guys knowledge. But I was being told the lies. I was being told, just do this and you're gonna get money. And I was gullible enough to believe it and waste my time only doing that thing. Because nobody was telling me that so much existed in the market. I didn't know about fundamentals like until a year or more after I started trading. After, imagine that was a whole entire year of just waste. It was wasted time. Because I genuinely did not take these markets serious until I found that there was deeper meaning behind that. Until I found that there was these real life, you know, investors and algos or whatever it may be. They weren't just moving these charts up and down. I used to think these charts were just random. I used to think this was like a simulated program that you had to guess where the market was gonna go. I had no idea that this was real money. And you know, like, I just had no clue. I just had genuinely no idea what I was doing. But again, nobody pushed me in that way. Nobody taught me to look out for those things. Nobody told me to go and be knowledgeable about the market. That's because you gotta understand, it will benefit people to tell you not to do these things, to keep you in a loop so that you can feed their pocket. Just being real. Just being real, guys. So you need to be careful with that. You need to pay attention to those individuals online that you see that are only pushing those narratives. Those are the people that are filling their pockets with your money. Your own illusion, feeding into an illusion that does not exist. So you have to be careful, guys. But all right, today was a good day. Appreciate it. We had great moves take place. We can end the month on a good note. CC. It exposed my greed, impatience, lack of discipline, patience, 100%. I think for a lot of us, the only people I've seen that have a lot more discipline, like just naturally, when it comes to the markets, are older individuals. You know, like I've done one-on-ones. Like when I do my one-on-ones, the people that I have to help the most always are the people that are 18 years old, 19, 21, you know, and it's like these hungry kids that is just like, they just want to make money. They don't want to hear me tell them, yo, chill. Like just study the market before you go and do something. Like they want me to just give them a strategy so they can go and trade it today, make money today. And it just, I'm sorry, it just doesn't work like that. So people get upset at me when they pay me money to get on a one-on-one. I'm giving them an entire step-by-step guide for them to have a clear path on where they need to go or where they should go. And some people don't want to hear about it. My favorite clients are, you know, people that are 35, 40. I've dealt with, you know, I've sat down with individuals that are in their 50s living in Europe, you know. Those people have way more patience. They are way more calm because they have more experience in life. They understand what it is to do work, to work hard at something and become good at that. They have that understanding. They respect that grind. They respect the fact that you have to go and become a better individual. Whereas others, they just don't want to hear it because they see Mr. Guru online, Lambo this, Lambo that, Bugatti here, Bugatti there, join my course, I'll make you rich. And you're like, I'm going to go with that guy. No, like, let's be real. That's just the way the game is. So again, pay attention to those patterns, be smart, be perspicacious as an individual. You gotta learn to think ahead and see past all the smoke. All right. But all right, guys, gold, we've reached those highs. We've made the entire move. Great analysis for the day. Simple today. It was simple market analysis following market structure, following the recent shift in those fundamentals, which we read earlier, right? We understood why the market was driving towards the upside. We understood our areas where we needed to respect. We had great plays. Some of you guys in the chat were able to take advantage of that. So props to you guys. Now what I say to you is stay patient, stay composed. It is the end of the month. Cut your trading, man. If you made money today, you made money this week, why are you gonna go look to risk that, you know? Be happy with your results. Let's end the month on a good note without having to say, you know what, I had my profits for the day. Tarzan ended his stream and I kept trading and I lost my profits for the week, or I lost my profits for the month, even that. Let's stay composed. We have plenty of opportunities that will come. Today's opportunities were great. Again, following that overall market structure, beautiful break, retest, another retest of this area, the continuation, right? Back right into these highs, over 200 pips worth of movement. Perfect, beautiful, beautiful. US 30 was a little bit more difficult, like I had explained, because of the fact that you did have that pretty large liquidity grab at market open. But as you reclaimed those highs, you ended up pushing right back into this previous area right here, which you're now exactly reacting. So ideas stay the same, following the same structure, same points. Just watch out with those liquidity grabs below those 700s. But again, overall, super, super good movement there. Very simple, just following those clean technical, those price action alerts there. What else did we do? USD JPY, right? USD JPY, again, didn't really give us that full pullback. Still sort of just stuck ranging above our area of interest. We can still be on the lookout for further buys above those 159.200s there, especially as dollar stays strong above the 99s. That can continue to support that bias here on USD JPY. But guys, I believe we can call it a day. We had a great talks today. I saw a lot of trades today. I appreciate you guys for sharing that with me. Next week, remember, we'll be doing more giveaways. Also, I know I saw some of you guys, or at least one of you, talking about that Discord group. I'll sit down with my team and see what we can do, because I believe, again, as a community, it would be extremely beneficial for us all to have that constant analysis. And then also what I was thinking is, if you guys have analysis during the morning, right now you would have to send me a link. If we have a group chat that we're all trading together in, we could just send the analysis right there. I can pull up the analysis and type it up. You can send the trade that you took. We can pull it up and see what you did good, what you did wrong. Were you following the main narrative, the ideas that we were talking about? Were you going against it? Before you know it, we have a whole community and we're just all holding each other accountable. We're all making sure that we stay composed. None of us are here to boast or to try and ridicule or humiliate one another, nothing. We're just here to trade and improve our game each and every day. So I'll make sure to talk to the team about that one today, guys. But yeah, again, if anybody has any questions, I'll give you guys about another 30 seconds. If not, we're gonna go ahead and call it a day. All right, guys? And gold, thank you. Thank you for giving us that push. Looks like we're all good. I saw repeated names from this entire week, so good stuff, everyone that kept it consistent. We stayed disciplined, kept it consistent. So far, I haven't seen anyone saying like that they've lost their entire account, blew their account, nothing like that. So that's what's good. I want to make sure that everybody's avoiding those silly mistakes. All right, guys? But all right, thank you guys. Thank you guys for your time. I will see you guys on Monday. We don't have a holiday on Monday, right? Just to make sure, let's just make sure. Where's my calendar? Let's see. No, looks like we're good. Monday will be June 1st. It'll be the first day of the month. And yeah, guys, good stuff. I will catch you guys next week. Take care, everybody.